Thank you very much, Chairman Powell. Chair Powell, at your Senate confirmation hearing, you were asked about the possibility that inflation is being driven by corporations in concentrated sectors of the economy. You said, and I quote, "That could be right. It could also just be, though, the demand is incredibly strong and that, they're raising prices because they can," quote unquote. We're all seeing and feeling the effects of inflation on consumer pocketbooks, but corporate profit margins are not hurting. In 2021, the profit margins of the S&P 500 index surpassed 12%, the highest profit margin on record, and is expected to be even higher in 2020. Corporate greed and consolidation are driving higher and higher prices for consumers above and beyond any inflationary pressures. Just last quarter, Tyson Foods, which sells 1 out of every 5 pounds of meat sold in the United States, claimed that their higher prices are due to rising labor and freight costs. Yet, they still managed to net an additional $500 million in quarterly profits. When it comes to rents, a corporate landlord recently remarked, and I quote, "We have an unprecedented opportunity to really press rents on renewals because the country is highly occupied. And so, where are people going to go? They can't go anywhere. We have a tremendous opportunity to press both on renewing leases for existing residents and to reset market rates, which we've reset numerous times, even this year," end of quote. This kind of blatant profiteering on the backs of hardworking families is simply outrageous. Could you elaborate on the role that corporations play in setting prices and how that is affecting inflationary pressures today? Would you also elaborate on what you meant when you said perhaps corporations are raising prices, quote, because they can?
Sure. So matters of concentration in the economy represent a series of interesting questions that are largely not settled. For one thing, it is clear that our economy has become more concentrated, largely due to lower levels of formation of smaller businesses. That has happened. It is not at all clear that there's a connection between a more concentrated economy and, for example, inflation. And of course, matters of corporate concentration are outside the jurisdiction of the Fed. Those are for the competition authorities and really not for us to discuss. In terms of why prices are going up, I think a lot of it has been, a lot of the places where prices have gone up quite a bit have been situations where supply is constrained and demand is very strong. And so take cars, for example. The demand for cars went up a great deal during the pandemic. People wanted to ride in cars rather than public transportation, and they wanted to move to the suburbs and things like that. Rates were low. The economy was stronger than people expected. But the companies couldn't really make more cars because they couldn't raise their output because of the lack of semiconductors. So when demand hits fixed supply, what happens is prices go up and margins went up. And so I think as the economy returns to normal, we would expect those profit margins to return to more normal levels.
Well, Chairman Powell, the example that I gave of Tyson, who said their prices were rising because of labor and freight costs, and yet they managed to net an additional $500 million quarterly profits.
I apologize. I'm having a hard time hearing your words. I'm sorry.
Okay. The example that I gave of Tyson Foods and the fact that they said that their prices were rising due to labor and freight costs, yet they managed to net an additional $500 million in quarterly profits. How do you explain that?
I'm not familiar with their profit and loss statement, but I will say, and again, there may be particular industries where there are competition issues. I don't know that. It's really not our focus or our authority.
Well, do you have the opportunity to look at rising costs and identify corporations where they are gaining substantial profits, yet they keep raising their prices. Do you have a way of examining that?
I think we can see that, but I think, you know, our job is to keep, you know, maximum employment and price stability. So we're not in the business of regulating individual companies or determining whether their actions, for example, are anti-competitive or that sort of thing. That's more for elected people and also for the competition authorities. So we do look at that, but again, I think a great deal of the price increases that you saw were a matter of supply being unable to meet demand, and the result was prices moving up. In many cases, that was the story.
Thank you very much. The gentleman from North Carolina.